So good morning, everyone. Sorry for the delay. It's a pleasure for me to be with you this morning and to introduce the FI session. First of all, I would like to thank you, EFRAG, for organizing this session. And also, I would like to thank you, Patrick, for, of course, his involvement and the quality of his leadership for having delivered this work in a very short time. And I hope you enjoy it. So I am the stream leader for the financial institution stream. We call it the A5. And our working group consists of 6 stream members coming from the banking, insurance, and asset managers sectors, plus the 3 EFFAS and the ECB as observers. Carsten and more recently Christina are one of 2 members of our group. So, as the stream leader, what are the main messages I want to address to you this morning? Very quickly, in a few minutes, I would like to point 3 main elements: the finding, the methods, and the main priority for the AFI group. The finding. FIs play a key role in the EU action plan in supporting the transformation of the growth model to be more sustainable. They are at the center not because the financial institution manage a lot of money, but because they have the duty to reallocate the capital flows. But also, we have to keep in mind that the financial sector is today one of the only regulated sector with specific regulation coming from the ECB and the 3 EFFAS. For this reason, that can explain that's why there is a special stream among the PTF. But FIs are data preparers as well as data users of reporting. The AFI stream has been focused on indirect impact only. That means that we were focused on the users' part of reporting. Second point, the method. On the EFRAG website, you can find the PTF progress report, which takes into account the main conclusion of our assessment report. Very briefly, assessment report results from an assessment process composed from different stages. The first one consisting in identifying important sources of information according to 3 categories: EU regulation, national regulations, and private initiatives such as private standards. Then we have been established a common reading grid, and on this basis we produce our analysis and preliminary conclusion, which were challenged by both the Secretariat of the EFRAG PTL, Patrick's team, and also we were challenged by also the members of other streams, because each assessment report has been reviewed by a panel of reviewers. So thanks to this work, the AFI group, the AFI stream, has defined the main conclusion, which are the basis of our proposal that are integrated in the final report and that you are going to discuss today. My last point, what are the main priorities for AFI stream? I think it's very simple. We have 2 main priorities. The first one is the development of standards should help to simplify and unify all EU regulation for AFIs. You know, today it's a very complex framework, and we'd like to simplify and unify all this framework. The second point is new reporting standards should facilitate ESG data for all stakeholders, of course, but as users, FIs have specific need to answer to the regulation, but also to our customers. These needs are the following. We need access to a limited set of material, comparable, and reliable KPIs. Second, this data collected needs to be timely and easily accessible. Third, this data must cover all sustainable topics, not only climate topics. And fourth, we need to include forward-looking quantitative information and monetary quantification of ESG impact. So very briefly, thank you very much for your attention. I leave the floor to Patrick, and I wish you a very pleasant session. Thank you very much. Patrick, you're on mute, I think.
You are very right. Thank you, Marie-Pierre, and good morning, ladies and gentlemen. It's a pleasure being with you this morning for this outreach event dedicated to the financial institutions, one out of the 7 events that EFRAG has organized to make sure the task force on preparatory work on EU sustainability reporting standards will receive input from EU stakeholders today, stakeholders from the financial institutions sectors. As you may know, the task force has a very tight schedule since our deadline is the end of January. However, we wanted to seek views from stakeholders, and now is the right time. We are sufficiently advanced to share our preliminary views on many points, as Marie-Pierre just highlighted, but these points are not finalized yet, and some are still open. So rest assured that the views expressed during this outreach will be duly taken into account for our final report. First of all, I would like to set the scene very quickly. The preparatory work on EU non-financial reporting standards is one of 3 pillars of the EU non-financial reporting project, which is currently underway. The other 2 are, as you may know, the revision of the directive itself, with a project draft that should be tabled during the month of March. And the other pillar is the possible evolution of the governance of EFRAG, on which the chairman of EFRAG, Jean-Paul Gauzès, is currently working on the basis of an ad personam mandate. These 3 pillars must be borne in mind because everything has to be put in perspective. It is very true that the current analysis of the situation is that the current directive, which I would call NFRD 1, has been an important step, but is not sufficient. So, you know, in the EU, as a jurisdiction with public legitimacy, there is a crucial need to go further. During the assessment phase of our work, it became very clear that a second step is much needed. It became also clear that beyond what is included in the legislative level, which we call level 1, there is a crucial need for a pragmatic regulatory level to foster comparability, reliability, relevance, and also timeliness. Therefore, the project may look ambitious, but it corresponds to what we have clearly noted, i.e., a real EU momentum, which is supported also by an international momentum, which we observe in many places. So interaction is needed between level 1 and level 2, and also with governance. But interaction is needed between what's happening in the EU and also what's happening internationally. Second, the project is focused upon the quality of non-financial sustainability data. There are three fundamental reasons for that. Data is key to support public policies. Just for instance, as a clear example, as mentioned by Marie-Pierre, the sustainable finance agenda is fine in terms of policies, but it's also, it cannot work without proper basic data. So for supporting public policies, it is absolutely essential to go to a much better landscape in terms of data. Second reason, it is absolutely key for entities also to benefit from clear data on which they can, base their own strategies and policies. This is a key element of the future. Sustainability has become a clear factor for management and governance, but in order to do so properly, it's not just literature, it is serious data. And the third one is, of course, in particular in the financial institutions sector, there is a clear need for trust and transparency, and sustainability reporting is one of the cornerstones of transparency and accountability vis-à-vis all stakeholders. Therefore, at task force level, we are firm believers that corporate reporting must walk on two legs: the financial reporting leg, which is pretty mature, but also a sustainability reporting leg that needs to mature very quickly. Third and last remark, let me finally walk with you through the key steps of our own thinking at task force level, and the structure of our report, and also the sequencing of this outreach event. We have, in fact, identified 5 key areas we want to address. The first one is the foundations. The foundations are not per se standard setting, but they are key principles and building blocks to be understood if we want to promote a standard setting that is fully aligned with the political environment we live in. So the first slot will be dedicated to foundations. Then any standard setting exercise need to have a number of conceptual guidelines that are translated in operational terms. We have identified 5 areas where the standard setter will need to establish clear operational guidelines to translate concepts into standard setting. Then the third slot will be dedicated to the architecture itself. What layers, what areas of reporting, and what topics to cover. Unlike financial information, sustainability information is not dedicated only to one type of transactions. By contrast, financial information is only based on monetary transactions, and accounting systems record all transactions, be it 1 cent or 1 euro. So, and then it summarizes information into financial statements. So it's a pretty clear perimeter and well-defined perimeter. Its strength and maybe somehow its weakness. But non-financial reporting, sustainability reporting, has to define its perimeter because it's somehow evolving, and there is quote unquote no limit. But you need limits in order to set standards properly. And you need to have a reasonable but comprehensive perimeter in order to reflect the full reality of sustainability matters. So architecture is key. Slot 4 will be dedicating to the reporting structure, i.e. where to report, how to report, and how to digitize reporting. This is a key element for financial reporting that came later. It started with content, but then people were free with their formats, and also digitization was not a prerequisite at the beginning. So it is very important for sustainability information to concentrate on these topics. And finally, and slot number 5 is more open because we are currently discussing this and working on it. We have to define the priorities because it is at the same time a medium to long-term project, but it also requires action immediately. So the Commission is considering first steps for 2023-2024. So what would have to be delivered with that deadline? So I will not elaborate further in the interest of time. We do apologize for the little technical incident. I hope everything is working well now. You have polling questions that are coming in the middle of each slot. So please use the system to answer those questions because it's also helpful. We have an inner circle that will contribute to this debate, and the outer circle can listen, but also operate via chat for questions, and also via, the polling, answering the polling questions. So please make sure that you use this possibility during this event. So each and every slot will have an introduction by a task force member, Carsten Zielke, for 3 to 5 minutes max. Then we have two inner circle participants that will deliver a 5-minute presentation of their views on the slot, and then we will ask other participants to contribute for a shorter intervention, like 2-3 minutes. I just ask the participants to be very, very precise on timing. Thank you very much in advance. So we are moving to foundations, the first slot, as I explained, and I turn immediately to Carsten for his introduction.
Yes, thank you, Patrick. My name is Carsten Zielke. I'm an insurance analyst running my own business, and I'm happy to run you through the slots and giving a small introduction. So if you could have slide 6, please. It's important to have, as a European standard setter, overarching principles. And we've proposed 2 here. One is the good foundations for accounting systems, which is reflected already in Europe, such as IFRS and also local gaps. It means we have a principle-based sustainability reporting system and not a rule-based one. Second overarching principle is that we have an inclusive range of sustainability reporting stakeholders. So it's not only investors, but also other stakeholders, reflecting the needs for this information framework. This is then split into 5 building blocks. As Patrick mentioned, it's important to get aligned with EU regulation and using the sustainability reporting momentum. But it's also important to addressing the specific needs of financial institutions in building block 2, taking into account the needs of SMEs. And this would mean that we do not want to exclude SMEs from reporting, but on the contrary, we need more information from them, but of course, taking into account proportionality. Building block 4 is then we acknowledge that each sector has its own specificities. We will have all principles, but we then have to also specify for each sector what is important. And then the final building block is that we take into account intangibles, which means that this goes beyond the traditional definition what intangibles are. On page 7, we want to address the specific issues concerning financial institutions. You have to bear in mind that we are dealing here with the industry which has the biggest part in investments in Europe. Insurers managing around 10 trillion euros in assets, banks 11 trillion in loans, and asset managers more than 14 trillion. So they have got a particular responsibility in the sustainability movement. That means they have a particular need as users to understand the data and also to exercise some influence. The other question is about intangibles. As I said, we're not talking here only about goodwill, but it's also the implication for the society, for instance, the entity is accessing, and what's its attractiveness for employees. So we would ask you the question whether this is something the ESS should address. Thank you.
Thank you very much, Carsten. Without further ado, we're going to turn to our first 5-minute participants. So, Matteo Brusatori, you are a member of the insurance industry specialists. You are an insurance industry specialist, and you are a member of Accountancy Europe Insurance Working Party. So, Matteo, I turn to you. The floor is yours.
Thank you, Patrick. I hope you can hear me quite well, and good morning to everybody.
Yes, we can hear you, no problem.
Fantastic. So, as you said, I'm a member of Accountancy Europe, and I represent in this session a little bit the auditing profession with humbleness and also without, making reference to more than what I want to say. I think that the exercise that we are going through and the initiative of the European Union is very important, and also is very, I would say, very critical from a point of view of the financial institution. We have not to forgive that, as was mentioned before, financial institutions are a user as well as a provider of non-financial information. And as we go into the whole discussion and the whole initiative of sustainable finance, I think that it will be critical to obtain and provide reliable and relevant non-financial information in order to make what we call the correct allocation of these financial resources, because financing the right projects means that you have available the right level of scrutiny and monitoring and selection, and then during the execution of the project, you have enough information in order to sustain your activity, but also to provide your stakeholders, being then shareholders or employee or others, some form of stakeholders, with the right information about your level of scrutiny and your level of activity. This is very important because, of course, non-financial information has a level of maturity that is different from financial information, of course, and also are managed at this moment with processes and controls that needs to be fine-tuned as a minimum and need to evolve towards a more structured and thorough model. This will be quite important. Of course, with my auditing point of view, I can say that non-financial information needs to have the same characteristic from a qualitative and quantitative point of view of the financial information. And I think that nobody disagrees with the fact that this information should be reliable, relevant, understandable, neutral, in the sense that it should be unbiased, and also understandable. Often, and this is a little bit of the experience that we went through the first round of assurance of non-financial information, particularly in Italy, thanks to the adoption of the current directive and also with the option of external assurance. We have seen that the control framework are not stable enough, that maybe there are some fragmentation, that the perimeter of information is not yet, let's say, complete, and that often some preparers are focusing on certain KPIs that, in their view, might have an importance to the market, but there is not yet that exchange of information between preparers and users that set the standard and that identifies in the correct way what will be the necessary KPI. So I think that the ambition of the project that EU is undertaking is very high, and I think also the documentation that you will share with us this morning is extremely important, and also as a good level of insight, but still operationally this has to touch base with something that is more pragmatic and more relevant, and also I would say let's get into the details, because I think that if we move from the foundation that you have set forward, I think that everybody agree with the fact that many stakeholders should use this information, that we need to sustain the momentum that is gaining across the European Union of sustainable reporting. And this is a necessity. I mean, it's not only something that we fancy doing because we are living in these moments and we are living in the pandemic, but it's something that in order to understand how correctly the finance is put into the pockets of someone or organization that want to use finance in order to progress towards a better world, we need to have some scrutiny and we need to have some monitoring. And so I think this is the main point. Of course, relevance, reliability, understandability, neutrality is something that we are looking at as an accounting profession. I think that the other dimension that we don't need to forget is that we are probably more focusing on forward-looking information rather than historical information. And this is another challenge for the professions, since we will need to equip ourselves with technicalities and skills and capabilities that at the moment has been important for some aspect of the activity, but is not, I would say, let's say, it is a transformational journey that we as a profession, accounting profession, have to do. We are a little bit lucky because with the Solvency II regime, we have already been able to embark in this journey, at least for what pertains the capital stability and the solvency of the insurance institution. And I'm focused on insurance because I'm an insurance specialist, of course. But I think that this needs to expand in various levels. So, for example, if you take also the discussion about the intangibles, I think we need to remind ourselves that currently the intangibles that are recorded in the financial statement are usually, let's say, a value that is a monetary value, which is subject to impairment testing. And usually this impairment testing is done using discounted cash flow. So what does this mean when we're talking about non-financial information? What model are we looking at in order to record and assess periodically the value of these intangibles? I think these are all questions that we want to answer, and I hope that this morning will provide at least some views. With that, Patrick, back to you.
Thank you very much, Matteo. By the way, I forgot to mention that all participants have access to an outreach document which was released last week, beginning of last week, which explains a little bit what we are talking about. Of course, it's in a slide format, so it's pretty summarized, but it gives a view. So now I turn to Massimo Romano. Massimo Romano is from the insurance industry, is from the Generali Group, so the floor is yours. May I kindly remind 5 minutes, please?
Thank you, Patrick, and good morning, everyone. First of all, I want to congratulate the task force for the terrific job that you made in this month. The challenge is huge, and you deliver a very decent milestone and deliverable so far. So congrats. I wanna touch some general points and then complement it for the financial institution as well, and the insurance in particular. First of all, I think that it's very appropriate to have a clear definition of what do you mean by overarching principle and building blocks, and also the operational guideline. I know that the pack was a PDF deck, but I think it's very important to define the purpose and the definition and the purpose of this basic concept. I think that the overall approach is very good. In overarching principles and building blocks, you touched the relevant topics. I think that maybe there is a need to add an additional overarching principle with reference to the prioritization, proportionality, and cost benefit. In this regard, I would connect it to the IFRS conceptual framework in relation with the cost benefit characteristic. Why? Because the approach is rightly very ambitious, but there is a need to address the different topics with the right level of priority, considering the overall situation. In relation with the intangibles, I think that even in this case would be needed a more clear approach on what this would mean in practice for the standard setting, and therefore even in this case I think there is a need of more deep dive on that. Regarding financial institution, for sure there is a need of this specific vertical, and as Marie said, we do need that also our stakeholders where we invest will provide this type of information. And finally, I think that also the global dimension of the standard in order to develop the standard setting, it's another element to be considered in the standard setting process. There is also an issue of terminology. Sometimes I see the non-financial reporting, sometimes the sustainability reporting. I would like to talk about pre-financial reporting. So there is an issue of terminology. I think regarding financial institution, there is a timing issue. One is temporary because, as already pointed out, financial institutions are already running this race. I'm referring to the taxonomy and the SDR regime, and therefore we do not have all the data from our stakeholders, so it's urgent to deliver these standards. And one is permanent because of the evolution that was already mentioned. Finally, a risk, a challenge, overload information. So be aware, as you know, that this is a risk that we are facing in the financial space. And keep in mind that the insurance sector is now implementing IFRS 17 and 9, which is a tremendous effort, and therefore should be considered in the overall discussion. That's all. Thank you.
Thank you very much, Massimo. Pre-financials, if I may react, is a term that is used many times, but non-financial is difficult because it explains something by what it's not. So being non-financial per se does not give the essence. Pre-financial is a bit, if I may. It's true that everything turns in the end into a financial flow, but nevertheless, it's a bit restrictive. So somehow there is a trend preferring sustainability, which is giving the more a medium to long-term view of value creation, both for the entity and also for society. So just giving some flesh around the bone on this terminology issue. Now I turn to the 2 minute to the shorter interventions. I turn first to Jean-Philippe Desmartins, who is co-chair of EFFAS and who is working with Edmond de Rothschild Asset Management. So Jean-Philippe, for your 2 minutes, please.
Yes, thank you, Patrick. Hello, everybody. So I'm very pleased to have these 2 minutes as a co-chair of the ESG Commission of EFFAS to emphasize the importance of intangibles. I refer here to the building block number 5, part of this ESS foundations. So I would like to testify the importance of intangible as a user, as an investment professional, but also as a European citizen. So as part of the private sector, I noticed that intangibles do represent today the economy of our century. Today, the majority of the financial value of a corporate comes from intangibles. Whatever these intangibles, human resources, data, information technology, patents, intellectual property, client satisfaction, supply chain, etc., etc. So this is mainly the remark from the business point of view. But in this very short time, I also would like to emphasize the importance of intangibles as a European citizen. And for that, I'm going to take only one example. Think about climate change and the urgency of climate change, and think about solutions to deal with climate change. And there we have education, and there we have belief in science, and there we have innovation capacity, etc., etc. We have all intangibles part of these solutions to deal with climate change. So thank you. This was my contribution. Thank you for your attention.
Very, very well done, Jean-Philippe. You are right on time. Thank you. Now I turn to Lucille de la Jonquière. You are a member of the EBF Sustainability Finance Working Group, and you work for CIB, Société Générale. So Lucille, the floor is yours.
Good morning, and thanks for having me here. So at Société Générale, sustainability is, as you can imagine, more than ever at the heart of our strategy. And hence, as the other participants reminded, greater availability, reliability, and comparability of sustainability data is definitely a critical success factor. Hence, we very much commend the work that the task force is currently undertaking. And with regards to addressing the specific challenges of financial institutions, we're very grateful to the task force as well for seeing as a priority a greater timing and content consistency between the forthcoming NFRD2 and the very long list of sustainability reporting obligation will be subjected to. You all, of course, heard about the Sustainable Finance Disclosure Regulation, the Taxonomy Regulation, also for banks, the introduction of sustainability risk factors into our Pillar 3 disclosure, and also regulation around ESG benchmark disclosure. But beyond the regulatory needs, the use of sustainability data is also essential to a bank like Société Générale for 3 other sustainability engagements. Of course, capital allocations to companies that have stable activities or that are or intend to be on a business trajectory that is compatible with the SDGs. The second engagement we are currently following at Société Générale is the impact mitigation of sustainability risk factor on the bank's traditional risk like credit market, operational risk, liquidity risk. And third, and it's very important for us, this is the steering of our indirect impact on the environment and society through the exposures that we have on our clients. And just as an example, since the COP24 in Katowice in 2018, Société Générale has been started to steer and to align lending portfolios with the goals of the Paris Agreement. And for those big engagements, access to sector-specific and forward-looking data is of essence. And for all those engagements, regulatory and also sustainability engagements, having also data from a larger spectrum of companies is also essential, but reporting obligations have to be properly calibrated for companies, and this is about the building block on including SMEs sustainability reporting in a proportionate manner. We actually believe that a clear distinction should be made between SMEs based on their employee number, their turnover, the size of the balance sheet, but also based on the listed or unlisted character. So below certain thresholds, we strongly recommend that the sustainability reporting standards should be optional for SMEs for obvious reasons, and I don't even need to remind the COVID-19 context. That's all I wanted to stress on this foundation aspect. Back to you, Patrick.
Patrick, you're on mute.
Thank you, Lucille. Now I turn to our third 2-minute speaker, Ulrich at Hartmann. You're a member of the Accountancy Europe Sustainability Finance Group, and you work as an auditor for PwC in the banking and capital markets practice. The floor is yours.
Patrick, I guess this is not right because I'm in the third layer regarding architecture.
Ah.
I'm sorry.
Suggest, Patrick, that we look at the polling questions and that somebody wants to react, perhaps Ulrich, to what he sees, and then there are also questions from the audience.
Yes, absolutely. So apologies, Ulrich, that's what I had on my list. So any reaction from, first of all, you have the polling questions. So I hope you have been in a position to answer the poll, or you are in a position to answer the polling questions. And point two, Lina, do we have questions on the chat, please? And if other participants want to contribute, they can raise their hands on the slot dedicated to foundations. So you raise your hand on Teams and I will see it.
Patrick, it's Hossein this time.
Yes,
okay.
Yes, there are questions on the chat, so I don't know if you want to take them now or later in the session.
Yes, let's go.
Okay. So we have a question about the overarching principle number 2 about inclusiveness, and especially about the role that preparers and companies could have in the standard setting. And this participant notes the importance to have relevant but also cost-effective standards. So that's one of the questions. The other comments are more suggestions about the wording debate that Massimo has alluded to. One participant suggests extra financial information instead of non-financial. And another participant suggests to not refer at all to financial or not financial, but to refer to climate-related information, social-related information, HR, human right-related information, etc. So not a generic term, but specific terms. Thank you.
Okay. Hossein?
Yes.
Anything else?
No, the rest of the questions are practical questions that we are trying to address offline.
Okay, thank you, Hossein. As regards inclusiveness, just a quick response. It is very clear for the task force that somehow what will be built should be aligned to the overall EFRAG model in terms of standard setting. You know that EFRAG currently advises the Commission on the endorsement of international IFRS, the international reporting standards, financial reporting standards. And it's the origin of EFRAG, and the current structure of EFRAG is a collegial system which I would call based on private-public structure. So you have representatives from accounting standard setters in the EU. Some of them are public, others are semi-public. And you also have representatives from the various key stakeholders in the EU, businesses, auditors, banks, insurance companies, users also, and some of the members may have academic background. So the collegial dimension is very much embedded into the EFRAG philosophy and EFRAG structure. So that's for that. Cost effective is, of course, standard setting has to include a cost-benefit analysis. So this is a key point. And as regards terminology, extra financial versus non-financial, okay, that's to consider, but we still are making reference to the financial reporting. And for us, a reference to climate, social or governance, ESG, per se, on a one-by-one, these are topics. You need an umbrella to define what you are trying to achieve. And if you want a structured second leg, it's good to have a terminology that fits the idea of having, a strong second leg dedicated to this area of reporting in the corporate reporting environment. So that's why at the moment we are prone to take sustainability as a keyword, but maybe to be considered. And in addition, we are only making recommendations. At the end of the day, the EU institutions may decide on the right terminology. I see, Anna, that you would like to chip in, so please.
Thank you very much. It is actually to do with the terminology. I wrote my master's thesis in 2000, and the title was The Non-Financial Aspects of Investment Decision Making. And I wish I could change the title because the non-financial, in my opinion, gives a slightly skewed or incorrect understanding on what we're talking about. So from a practitioner's view, I wish we could drop the non-financial terminology or at least introduce the concept of financially relevant sustainability data. And that could kind of like be the third leg, if you like. It would be the low-hanging fruit to add what is financially relevant sustainable data and have that part of the reporting. And we should all think that this is what is coming out of these recommendations is not the final version forever, but it is one step in the journey on this reporting. And having the financially relevant sustainability data could bridge the gap, in my opinion, before we can have a full set of sustainability criteria. Thank you.
Thank you, Anna. I think it's interesting, first of all, your reaction as compared to your thesis, but also it is interesting to observe that, we have to be careful because in the EU, the double materiality approach is key. So it's at the same time financial materiality, but it's also social and environmental materiality. Therefore, we have to be very careful about not giving the impression that we are overstating one dimension of the materiality as compared to the other, if I may, in the interest of the evolution and the specific position of businesses in the EU as compared to their relationship with society in general. So I think that, do we have the answers to the polling questions?
Yes, we should have them. Gloria? So what we see to question 1, that most say that it should be addressed to those users and preparers in combination as 3 separate categories: asset managers, insurance companies, and banks. So there seems to be quite an agreement on that. However, on question 2 related to the intangibles, whether the European standard setting setter should develop specific standard setting approach on intangibles, the views were much more mixed. We see actually that 30% said not much new. So 45% actually said if I take not much new and do not new in one category. So it's only a slight majority that would say yes to this question. So that is perhaps a message that the project task force may wish to consider.
No, but this message is very consistent with the one received during the spring consultation issued by the Commission, which is a majority, but not an overwhelming majority. It's a small majority, which is showing, in my view, a key trend. That it needs to be, it's a bit unclear what it means, and that's why we need to be a lot clearer. So with that, we conclude. Thank you, Saskia. With that, we conclude the first slot, and we are moving to the second slot on, conceptual framework, operational guidelines. And I turn to Carsten for his introduction.
Yes, thank you, Patrick. So the second slot, the operational guidelines should set a little bit the tools developed, which should be developed in order to get to the real standards in the end. What we have here are 5 blocks. First of all, the policy priorities. As already indicated in the last slot, there should be an alignment with the EU, but also we should have a look. Could I have the slide 9, please? Thank you. It should also refer to global benchmarks in order to have consistency here. What is very important is the quality of information, what we get. In the end, it should be audible, and therefore it's important that it has the same sort of quality which you would use for financial reporting. And on the time horizon, this is something which is already today a big issue between national gaps and international accounting. We need both. We need backward-looking information and also forward-looking information in order to make proper assessments. In the levels of reporting, here it's important to understand that we are not talking about only consolidation as we know it from financial reporting. It's rather the influence we are exerting with our operations and what can we control out of it. Here we can look at the value chain and also on our direct influence on the operations. You already mentioned it, Patrick, the double materiality is at the heart of the debate. This concerns financial materiality, but not only, also this sustainability materiality, and which goes also into the debate of intangibles. If we now turn to slide 10 and look at the specificities for financial orientation versus for financial institutions. Here again, what is the most important in our view is the relevance, comparability, understandability, and reliability of the standard setting of the information we get to have a proper standard setting process. It's important to understand that we are not talking only about quantitative monetary information, which would be reflected in the financial reporting, but also about qualitative information and quantitative non-monetary information. This would mean, for instance, the emissions of CO2, which you would measure in tons and not in euros. Everything should be made in a way that becomes audible, which should be the aim of this information being delivered so that it can be used by the different stakeholders. And again, it's important to have forward-looking approach here in order to make proper assessments on the future influence of our own handlings. On slide 11, please. Here again, we talk about sustainability materiality and financial materiality. Both should be taken into account. So it's not only to see whether it's going to be reflected in the accounts, but the influence the entities have on the environment, on the social and on governance. It's, for instance, concerning the insurance sector, if we take into account the climate change, we should also have a view on what the technical provisions will endeavor with this materializes. So it's not perhaps measurable today from a financial point of view, but in the long run, it has an influence on a risk position. Of course, when you make such an assessment, you would not only say, hey, well, I only look at my entity and therefore I decide whether it's important or not. You should rather start from a sector agnostic, so an overall standpoint of view, then look at the sector specificities and then only define whether it's relevant for your entity or not. And so you should not hide behind the principle of comply or explain and just say, oh, it doesn't concern me, therefore I do not report on it. It's more complex than this. And of course, you should report on your own materiality assessment process in order to justify why you've taken this information into account. So we're happy to get your feedback.
Thank you very much, Carsten. Now I turn to our participants, the 5-minute interventions. First of all, Richard Matheson, you work for TrueCost, which is part of S&P Global. So can you please take the floor?
Thank you, Patrick. Delighted to be here. We very much welcome this effort and congratulate the task force. I know that from my days on the high-level expert group on sustainable finance, how challenging putting together recommendations can be. So we would definitely at S&P Global welcome a common, consistent framework for sustainability reporting. We think that will benefit everybody and ensure that we can guide capital towards sustainable outcomes. TrueCost and S&P Global is a user of a lot of sustainability information across all of our activities, including credit ratings, benchmarks, analytics, and data, and we provide a lot of data to the market. So we're a large user, if you like, of sustainability information. The first point I'd like to make is we believe in a minimum set of ESG indicators that is broadly applicable across different sectors. We think this is a sort of foundational requirement that's necessary if we're going to analyze a wider set of companies beyond the largest companies that have the sophistication to really analyze some very specific indicators. And we think that it's important because banks lending to smaller customers or asset owners who have a very large universal owners, in other words, will have a very large number of companies that they may invest in. And the standards cannot be standards that just apply to only the largest companies in the world. So we think that a core set of ESG metrics in particular would be very useful as a minimum threshold requirement for anybody seeking to report on ESG. We think that a reference to the emerging developments on international reporting standards would be useful, including those ones that are becoming widely adopted on climate change. We think that sector-specific ESGs are very important, especially when it comes to actually looking at targets and setting targets. I mean, we do note that there are a lot of organizations setting net zero climate change targets, but sometimes it's hard to see how a 2050 target translates into a 2021 set of actions and a 2025 set of near-term goals. So we think that sector-specific indicators are going to be very important. Ideally, these standards reference different forms of capital, such as natural capital, human capital, social capital. Ideally, the disclosures are not only in sustainability format or in financial reports, but we would also welcome disclosures across a widespread set of financing documents and not just labeled types of financing. So yes, green bonds, but what about all bonds? What about all loans? We think the scope for having a minimum set of information incorporated into financing documents outside of annual and perhaps quarterly disclosures. We note that there are operational type disclosures that can be made, but just to note that also in some cases, disclosures at the level of the specific asset may be required also, especially where that asset may face specific risks and may become stranded or significantly impaired in its value in the future. So we believe that from a materiality perspective, disclosures of assets whose value could be significantly impaired should also be made. And in fact, at S&P Global, we analyze about 2.5 million assets owned by companies. So we would very much value that type of disclosure. We would also note disclosure at the product level for companies for whom products present a material impact, either positive or negative, should also be made. Time horizon, just a comment on time horizon. There's often a mismatch between long-term commitments and short-term commitments. So as I said, I think some near-term target setting is needed as well as some medium and long-term. Another note on time horizon is that materiality assessments should probably be made at different levels and different time horizons, given the impact of ESG may only be realized at a future date. Therefore, we think it would be useful to distinguish between material issues in the present and potential material issues in the future. So just distinguishing between materiality, present and future, as well as past. We do think that double materiality is important, and we apply that in how we analyze sustainability. We think that financial materiality is actually varied in the sense that, you know, the way you look at materiality if you're an equity investor can be very different from the way you look at materiality if you are looking at credit. So just to note that that may also flow into the sustainability materiality assessment. We think also that materiality assessment should be at different levels, and the reporting entity should determine this and disclose this. So whether materiality is materiality for an operational issue, a supply chain issue, a product issue. And I think this is important because supply chains and products is often where the majority of risk and perhaps opportunity may lie from a sustainability perspective. And if those are not considered in materiality assessments, there could be leakage outside of the European Union of key issues and key risks. And final point to note is we do believe that externality cost accounting is going to be important in many cases for determining materiality. So looking at the extent to which materiality of a sustainability issue can be financially material to a set of stakeholders and society at large, beyond what a company may recognize directly on its balance sheet or P&L in the near term, is going to be an important point, especially when considering some elements of things like do no significant harm between different pillars of sustainability. Thank you very much.
Thank you very much, Richard. By the way, double materiality is not seen by the task force as something being black or white. You know, there are many items that have a level of intensity that differ, but that nevertheless are, you know, linked to the two aspects of materiality. So you can dwell on that for a long time, but let's make sure that, you know, it's a balancing act between what is more socially and environmentally material today, but will become more financially material tomorrow, or the other way around. So it's a level of intensity moving over time, depending on the time horizons, as you mentioned. So I turn now to Anna Irske. You are from for the Bank of Finland Asset Management Division. So Anna, apart from your thesis, what can you tell us?
Thank you. Just to begin with, like to say that these are my personal views. So these are definitely not the views coming from the Central Bank of Finland itself. So I'm talking as a responsible investment ESG specialist with a 20-odd year career. I used to work for a Finnish pension insurance company. So I think that is why I got invited here today, just to make that clear. But I like to point out what Marie-Pierre said at the beginning of the session today, talking about all sustainability topics, not just climate. And I couldn't agree more. There's a lot of discussion on climate change, and there should be a lot of discussion on climate change, but we should also remember that climate change has got human rights issues, and we should look at so like sustainability as a wider topic, not just climate. I would, however, like to add one word to the statement of considering all sustainability topics, and that is considering all relevant sustainability topics. We can't ask entities to report everything from A to Z. That is clear. We need to be able to come up with guidelines. We need to be able to come up with a reporting framework that concentrates on the material, on the relevant issues. And in order to do that, I think we should definitely look at global benchmarks, and we should look at global initiatives like has been suggested here. When it comes to different quality of information or standards, we can already look at initiatives like the TCFD and the SASB, for example, that do have guidelines and recommendations on how to report and what are the relevant factors. What Richard just pointed out on the different timeframes, I think TCFD does it very nicely, where you have the short term, the medium term, and the long term views that you need to put forward, or also like look at your risks and opportunities from that time frame perspective. Time horizon, if we're just thinking of it backward looking, forward looking, yes, definitely. Backward looking is not enough. When we think of the reporting and when the reporting comes out, it comes out several months after the financial year end. So it is a nice view for the companies or the reporting entities to give what they have done and what the results are. But it is equally important that they do give some forward-looking statements and they do give targets. And then us as investors, we can look at these targets and make comparisons between the target setting by different entities. What I would like to point out is the burden already existing in the reporting frameworks for especially larger companies and increasingly for smaller and medium-sized companies, because everyone's requesting data. So I would suggest that when we think of these guidelines and we step forward on making recommendations, is to look at what we can utilize on existing frameworks and existing guidelines, and what could be things that companies, reporting entities could drop, could forget. What is the something new that we can bring that is beneficial to stakeholders, rather than adding an additional layer to report on? I think that would be a good thing to get more sort of like interest and enthusiasm towards sustainability reporting. And I would like to bring also the notion of reporting on impacts. That is key. What is the impact that the entity is creating, or what is the impact they're having? And that includes not just their own operations, but the value chain, just like Richard previously pointed out. I think that would be kind of like my main points for the time being. Thank you.
Thank you very much, Anna. As regards the shorter interventions, I turn again to Matteo, please. 2 minutes. Matteo, are you with us? Okay, so Matteo might come back. I turn to Uwe Sigmund. You are working in the insurance industry for R+V Versicherungsgruppe. Could you please take the floor?
Yeah. First, do you hear me? Is the first question?
Yes, we do.
Okay. I'm coming from the cooperative insurance and banking sector. I'm also part of the sustainability board of DZ Bank, the second largest bank in Germany, and also of the sustainability committee of the German Insurance Association. So I'm quite aware of the problems. I just would like to comment on 2 points. The first, Carsten, you mentioned the quality of information and standards. I would also raise the issue of quantity of information, as Richard has already done. I would like to see a much wider scope of standards, and I would recommend some points. First, EFRAG says that firms should report that are capital market oriented. Maybe this could be changed to firms that are investable, since I'm coming from the asset management side of the balance sheet of a large insurance firm. So we are very much afraid that this standard setting does not capture private equity, private debt, infrastructure, real estate, and other issues. Second, you should think whether the size issue should be changed from 500 employees to, say, 200 or 250 employees. Just to give you one impression, in Germany there are about 4,000 firms with more than 500 employees, but just 500 out of this report currently under the sustainability guidance. Third, you might add another characteristic, not only size or balance sheet size or employees, but also assets under management. And this is very important for all types of financial firms. Just think of SPVs, funds, fund of funds, real estate firms, where we also would like to have a lot of sustainability data. And fifth, you should also think about how to get foreign firms to report within the European Union, because we are international investors. So my first point is widen the scope as much as possible to get more data. And the second point is about proportionality principle, the building block 3. I see it in a much wider sense than just on size, like the small and medium enterprises. I see it more in the sense like in Solvency II, that proportionality should also be applied with regard to the impact on sustainability and also with regard to the underlying risk. So maybe you could align a little bit more with Solvency II with the proportionality principle. Thank you very much.
Thank you very much, Uwe. Now I turn to Isabel Kelly. You are working in the corporate sustainability division of Condrian.
Thank you. Good morning. Do you hear me?
Yes, we do.
Thank you. Thank you for the invitation and to participate. And also congrats to the task force for this first report on EU setting standards. I think given the pressure we face from the financial industry side, and especially related to taxonomy issues, the first word will be the pragmatic, really focus on what is relevant for us as a user, and also for the company, of course, in which we invest. Of course, we need to ensure the due diligence on corporate requested by ECDR, and as I come back to the word said just before by Anna and also by Marie-Pierre, it's really important to not only to focus on climate, but also on social issues. Of course, we know that the strength of the sustainability analysis was in the fact that we go beyond the own operation of the company. So the value chain is important, and we know we need to have a clear view on what is at stake in the value chain of the company. Of course, not going far from the level 1 suppliers, for instance, because we know that there is little impact the company can have on this. So we prefer to have for all companies, including the international one and not only the European one, a view on the level 1 relation with suppliers, so that we can really evaluate the potential engagement that the company can have and the results and the outcomes that they can get from this. As far as related to the double materiality, perhaps just one word about the terminology. We really need to clarify, especially compared to the SFDR use of this concept as well, because look at your risk versus principal adverse impact issues, but that's an anecdotal aspect. I think what is important is really to have a view on what the company consider as the element that are taken into account at the financial side, and what they consider as material monetized in the financial assessment versus what they can give us in terms of potential sustainability issues that are also that are more qualitative but less materialized in terms of financial aspects. So the frontier is really thin between what is at the financial materiality side and what is at the sustainability materiality side. And I come back to the fact that materiality is a concept that evolves over time. So it's really important to get this information, to have a clear view on what is integrated in the financial assessment of the company made and what is outside this, to give the possibility to the portfolio manager or to the financial community to make ourselves the final assessment of what we think is critical and material and relevant for the company as a whole. And coming back to the forward-looking aspects, of course, it's crucial because we have to assess the future performance and the resilience of the company also to sustainability risk and opportunities. Of course, we know that there is no universal scenario that can be used today. So narrative aspects and qualitative disclosure about the assumption used is crucial for us. We also will see merit if we can potentially see some reference scenarios that are mentioned by the companies and that can give us the opportunity to get information, to get informed about how we can compare companies between each others related to that. So relevance of data for relevant users, standardization of the most relevant issues, and also what is material already integrated in the financial assessment and versus what we can find in the sustainability aspects. Thanks.
Thank you, Isabel. I turn to Osin. Do we have questions? Saskia, do we have the answer to the polling questions also?
Yeah, Hossein is on mute, I think, so he is not I hear him, but he is not. We will first do the polling question, perhaps, and then we come back to you to make it a little bit more fluent. So on the question about the coherent set of disclosure requirements, a majority is saying that a reasonable set of KPIs focused on own operations would be the preferred way. And then on the double materiality question on the step-by-step process, it's a bit mixed views, but the first priority would be bringing together sustainability material issues and financial material issues. And then the second one would be prioritization of methodologies. And the third, understanding and identifying the relevant users. But as said, the results are a bit split, as you can see from the screen, over the responses. But the bringing together sustainability material issues and financial material issues is the one that stands out and have about 1/3, a bit above 1/3 of the answers. So I'm going back to Hossein now, who should be unmuted and will give some audience questions.
Oisin? You are
Oisin
still
is
on
coming
mute
here. Voilà.
Sorry, I had a little sound problem with my computer. Yes, we have a number of questions around the concept of materiality and the need to clarify that concept. In particular, the link between materiality, and which is entity-specific aspect of relevance, and comparability. And one participant asked whether entities will be required to also disclose non-material information if that information is material for their peers or for their sectors or for different sectors. Another comment is a word of question about...
Maybe Oisin, maybe let's address this one quickly. The view of the task force at this stage is that, materiality assessment, double materiality assessment is needed for standard setting, but it's also a tool that will be used at entity level, because, you have whatever is believed to be material from a general standpoint, standard setters point of view, approach. And you also have what will have to be done at entity level. So entities should conduct a materiality assessment under the double materiality concept. And they should determine, one, whatever is not included in the standards that would be material for the entity. And they can also conduct a comply or explain exercise. This is under discussion, but a comply or explain this exercise for the mandatory ones under the standards. By the way, a comply or explain approach doesn't mean that you can escape from a disclosure without due justification. But if there is no point for you to disclose, you just say that, in fact, your impact or the disclosure is not relevant for you. So it's not excluding, it's saying not relevant for me. And this is key because you can compare with your peers under that approach anyway. Oisin, the other points?
Yeah, there were another question about forward-looking information and why the PTF was not focusing, like the ISB, on current or past information. And this participant noted that forward-looking information is very hard to get, very costly, and difficult to audit. So why isn't the PTF focusing on current information rather than forward-looking one?
Well, we are not leaving behind the retrospective information. But everybody knows that it is one of the quote-unquote weaknesses of financial reporting. It concentrates on retrospective information. And of course, there is a very general recognition that forward-looking information is key for sustainability matters. Forward-looking information, to a certain extent, you cannot predict the future, but you certainly can describe your policies, your targets, the action plans that you are dedicating to those issues, and also the resources that you are putting into it. And resources, as Richard mentioned, can be for the following year in your budget. Are you aligned with trying to deliver by putting resources and under what targets? You don't have a budget without targets. So you can have a medium-term vision also through 3 to 5 year plans. You can have, CapEx are not going to deliver tomorrow. A CapEx is an effort to build something that is going to deliver medium-term or longer term. So all without predicting the future, you are also trying to put a framework on how you try to instill your strategic vision into action. And I think that forward-looking dimension is key. at least the PTF, sorry, I'm expressing the view of the task force.
And lastly,
anything else?
There was a word of caution about the interpreting the polling question results. And one participant noted that a bank can be a preparer, a user, an asset manager, have an insurance leg or not, and therefore the responses could be interpreted in different contexts.
Okay, you are quite right. Polling questions are interesting because it's interactive, but of course we need to be mindful of what it means. Okay, thank you, Osin. I turn to slot, and now we're moving to slot 3. So under slot 3, Carsten, for your kind introduction, please.
Thank you, Patrick. Well, for slot 3, we look at the architecture, which is the heart of the standard setting process. We first have to, on slide 13, please. We have to bear in mind that we have 3 layers, which is the overall layer, sector agnostic, which means not specific to one sector, then which is sector specific, and then coming back down to the entity. And we would have 2 dimensions, reporting areas and topics and subtopics. This can be shown in an illustrative way on slide 14. So what is important to know, to have these 3 dimensions here: strategy, implementation, and especially for us users to have a correct performance measurement. While the strategy englobes the overall business strategy, the topics we just discussed about materiality, but also sustainability of the governance and the organization. In the topic sector, we set policies and targets, action plans and resources, and come all together then to the performance measurement, where we assess the performance against the targets set. We can divide this into, on page 15 now. In the traditional way, there are 2 ways of doing it. Option 1 would be to keep a little bit, consider as ESG, while G is changing here from governance to general, which includes also brand communication and innovation. What is important that we try to make a link with the multi-capital approach in order to get a holistic view on the topics covered. And option 2 would be to divide the social bit on page 16, please. To divide the social bit into people and relationships. While people concern more people working within the organization, while relationships are relationships outside the organizations. Here again, we would have a link, still a link with the multi-capital approach in order to promote the natural capital, human capital, intellectual capital, and social relationships. Turning now to the specificities for financial institutions on page 17. We have to bear in mind that, again, that financial institutions are both users and preparers, and therefore the European standard setter should address the needs of these categories. What is really important is that the requirements should be aligned to the different legislations which we currently see or which are developed in order to simplify the approach for financial institutions, in order to avoid double or triple reporting in different formats. And what is also important, that we should not only focus on climate. There's more in ESG than climate. It's also social and governance issues. In the polling questions, what's important to us is also to get a feeling what the time lag in reporting should be, given that you as users have to rely on the other reporting entities you invest in order to make a proper, reliable reporting. So we're happy to get your answers there. Thank you.
Thank you, Carsten. On architecture, we will start with Lucille de la Jonquière. So, Lucille, for your 5 minutes.
Thank you very much, Patrick. So as both users of sustainability information and preparer of sustainability reporting, we can definitely testify that a clear, meaningful, but also as simple as possible architecture is very important for standard setting to get the right level of sustainability information. Hence, we can reasonably say that we are supportive of the proposed standard setting architecture in 3 reporting layers, and are having also 2 dimensions with reporting areas on one side, but not too detailed and too complex, and also having topics and subtopics covering all sustainability dimensions. We are less supportive of having mandatory links with multi-capital because we do not find it incredibly clear, and we are a bit fearful of having a too complex regime especially for our corporate clients, but also for us as preparer. If I may, I would like to say a few words on the 3 reporting layers, and in particular on the sector agnostic aspects. Obviously, mandatory sector agnostic indicators are key for comparability purpose. And as a starting point, we would recommend that company disclose all the environmental, social, and general aspects that are currently covered in the financial, in the sustainability reporting for financial institutions, for us to be able to meet SFDR and the very long list of principal adverse indicators. Also our obligations under the taxonomy regulation, under which we will be required to publish green assets issues. Same for integration of the ESG factor into Pillar 3 and ability to meet the benchmark regulation. We are actually concerned over the current lack of timing synchronization between the availability of those very important sector agnostic indicators and the application dates of financial institution disclosure obligations. So as you all know, SFDR is applicable as early as March this year, and information are not available. And also the long list of principal adverse indicators is expected to apply for us in 2022. The second point, which is also key for us, is the disclosure obligations we have under the taxonomy regulation, and it's applicable next year. It's applicable for both non-financial and financial institutions. So for financial institutions, that would be about disclosing KPIs on the alignment with the taxonomy regulation, the alignment of how their activities are sustainable. And getting this information is obviously a prerequisite for us to disclose green asset ratios. And there is no time lag that is currently foreseen to allow the financial industry to collect the necessary data to be able to disclose information on their own alignment on the taxonomy. And we have basically millions of corporate clients, so it's going to be very complex if we do not have at least 3, 6 months or 12 months to collect all the necessary data. On the sector-specific indicators, other participants have stressed the importance of having this sectorial approach. We also need to have specific targets from companies, as well as location-specific indicators. And this for multiple uses. I've also addressed this at the beginning of the conference, but we need the specific sector-specific information to make a relevant assessment on the extent to which our clients' activities can or become in the future vulnerable to sustainability risk factors or can benefit from ESG opportunities. Also, it's key for us to properly analyze how our clients' activities are impacting or are likely to be impacting tomorrow the planet and people. So for us to better accompany our clients into the transition to a much more sustainable future. And third, it's also key to assess sector-specific indicators to assess our clients' positioning towards the technical screening criteria of the taxonomy and the do not significantly harm principles and minimum social safeguards. Just in the interest of time, I will potentially only develop on the challenges we're facing with regards to the application of the taxonomy. We are actually facing, this is probably where we have the most significant data challenges. And the major one is on the assessment of companies' alignment with the do not significantly harm principles. So it would be ideal if companies would be able, under the different environmental subtopics, to disclose how they are abiding by the long list of do not significantly harm principles, mainly based on EU norms, and the same for under the social pillar. The information on companies' alignment with the minimum social safeguards is also missing, and we are in parallel today under our duty of care missions, making significant effort to collect information on human rights and affected communities, which are for us a very important area for improvement. So we are grateful for the task force to added those two main people issues in their infrastructure. And finally, if we have to incorporate a sectorial dimension into the forthcoming sustainability reporting, we believe that this should not go without a harmonization of sector classification. Otherwise, it's going to be very complex for us to compare indicators between companies within the same sector. And the final ask that we would have as bank is to have as well sufficient information on the way companies are segmenting their activities, because we have many clients that are operating across multiple business activities, and it's very important for us to have a clear distinction on the share of their different activities, especially for general purpose financing, where we would like to better assess the contribution, either positive or negative, of that kind of financing on the environment and society. Back to you, Patrick.
Thank you, Lucille. I turn to Ulrich Hartmann with apologies for the first slot. So now the floor is yours.
Thank you, Patrick, and no problem. Yeah, first of all, I would like to say thanks to EFRAG and to the task force for the work they have done until now, very helpful. And I totally agree with most points. I would like to draw the attention in my speech a little bit to reporting areas. As you all should agree, the financial services industry is very crucial for the transformation of the whole world. In the end, I'm referring to the European Action Plan on Sustainable Finance, where the financial services industry got the mandate to help to drive the transformation, mainly in that direction that the financial services industry is key on driving the investments for the future in the right green and sustainable direction. Therefore, Carsten mentioned in the beginning very clear, FS is not only a preparer of non-financial information, it's also a user of financial information. And that is due to the point that there are much of regulations in the place around financial services. I just would like to refer to the ECB guideline, the EBA paper, and in the end, all the local regulations, for instance, in my territory, the BaFin regulation on sustainability risk. There's a lot of regulation in place there, and key on that is the regulation around the risk management of the financial services institutions. And that is once again very crucial for the transformation, for identifying which investments are sustainable ones, which investments are green ones. And the most challenging part, what I see in the industry, is quantifying of sustainability risk. So at this point in time, it's not really clear what is the best model for quantifying sustainability risk in the financial service industry regarding the clients the FS companies have. So non-financial reporting, as we are developing here, is very important as a data provider for the risk management of the FS industry. Yeah? And that is the point I would like to draw the attention. Non-financial reporting will be crucial as a data provider for the risk management of the banking industry, the insurance industry, and also the asset and wealth management industry. So I'm thinking about should we start a conversation, if it is not done yet, should we focus on the conversation between the FS industry, the task force, and also the regulators to see which kind of data the FS industry will need for their risk management, for their internal risk management, in order to decide which clients and which investments are sustainable and needed. And that is very challenging because from my point of view, what I see in the market at this point in time, there's no clear benchmark risk management system or model for quantifying sustainability risk. So we have a timing issue in that point. And the second point I would like to draw the attention is scope. That is something that Uwe has highlighted some minutes before. The financial services institutions need to put all their clients into their risk management and decide whether they are sustainable or not. And at this point in time, when we are talking about the scope, we are focusing on the big companies, those companies outside which have more than 500, 200 employees. But in the end, financial services needs to have the information from all firms. So we need to discuss once again what is the right scope. Having also in mind a challenge here, everyone is clear that we couldn't implement the whole non-financial reporting system for very small and medium-sized entities. This effort may be too hard for those small players, but we should discuss which ways we can go ahead in order to give much more data to the FS industry for their internal risk management. So that's my main message. First of all, could we align a little bit what risk management data is needed in FS industries into the non-financial reporting directive? And the second one is the scope to get even more firms to publish non-financial data than we have seen by the big firms in the past. That's my point of view. Thank you very much.
Thank you very much, Ulrich. Just one point. This is one of the reasons we consider in the foundations, the sustainable finance aspect and the inclusion of financial institutions are as key players of, the overall policy in the EU. That's why we have established that it is a building block, something to bear in mind, because all the challenges that have been described, that are being described today, are key. The risk being that, in fact, you end up with greenwashing, social washing, and, some sort of very, very messy, reporting landscape because of lack of proper data and when needed, proper quantification. Thank you. I turn to Isabel for the 5-minute intervention, please. Isabel? You are, on my screen, you are frozen. Maybe in the interest of being able to listen to you, maybe you can put the camera off. Do you hear us? Okay, Isabel, we have a ground control. We have a problem. So, you know what? May I suggest if you hear us, may I suggest that you disconnect and reconnect, and I am going to move to the shorter interventions, the 2-minute ones, and you will come back. So on architecture, Elena Flor, you are from Intesa San Paolo, and you participate to one of the task force of the EFRAG lab. Go ahead, Elena, please.
Okay, thank you. Thank you very much. Thank you for inviting me, and congratulations again for the work that you have done so far. Just very few comments on the points that have been raised on architecture. I agree on the view put forward by the task force on the 3 layers, 2 dimensions, and also on the need to simplify and streamline the reporting for financial institutions. In that respect, as you have put forward a few options, I would probably be more in line with the first option on the 3 dimensions, which is, I understand, which I find simpler and more in line with the ESG approach, which is also the approach followed by analysts as investors that are looking at companies when assessing the sustainability of the company. So I would favor that approach. I'm also not a fan of capitals. So even if I recognize their substance, and I share your point on being able to be compatible also with the capital reporting. Right now, I find that the capitals are just another layer that we have to add to the dimensions that we already have. So we already have dimensions and topics and sessions and so far. So this is generally our view on that. I fully support the fact that we have not only to focus on climate, so there has been a strong focus on climate lately, but we need to focus on an overall sustainability. So on all the dimensions that are material for the company. And I would also like to stress the timing factor that has been put forward by Lucille already. For financial institutions to be able to report in line with the required recommendations, we need data from non-financial companies. This is particularly true when talking about the taxonomy, but Lucille has put the point forward, and I would really like to stress that, because for the implementation of the taxonomy on our portfolios, on our records, timing is a key issue for us, and for sure data availability from our customers. Just a word on terminology. We have talked about that earlier. I'm perfectly fine with the sustainability statement that I've seen on your records. I welcome very much this change, because non-financial information was a bit about maybe less important than financial information, maybe something that doesn't have an impact on financial information. It is not financially material. This is not the case for sustainability reporting. So I very welcome this change that I've seen in your documents. And I'm just stop to that, and thank you.
Thank you very much, Elena. Is Isabel back with us? I see her on screen. Do you hear me, Isabel?
Yes, I hear you. Do you hear me now?
Yes, we hear you now. Maybe in the interest of caution, maybe you should put your camera off, and concentrate
Okay, thanks.
Yeah, go ahead. Go ahead.
Sorry. Yes, so first of all, I would say we are supportive of the 3-year layers approach that is here proposed, because it's already it reflects, in fact, the ESG assessment practice we use. The only thing is that we find it can be a bit complex. And certainly we see, as you know, at financial institution level, and especially for the asset manager, we need to give the information at portfolio level. So we need to aggregate the figures and the data we collect from the corporates we are invested in. We also need to aggregate at the financial institution level for SFDR purpose, notably. So what is important for us is to see how we can reconcile the 3 layers materiality data at corporate level, so that we can then use it to aggregate it at portfolio level. That is a major issue for us. So it will be important that we get the information on the 3 layers that are proposed, but also to get the view at aggregate level at the corporate side. Another important element, and I fully share the views that were given by Lucille about the challenge we faced to collect the data. I think what is crucial is that we start from having and getting the information and the mandatory indicators related to the EU financial regulation, especially the SFDR 1 and the taxonomy. That is really important for us and crucial. We could add, if possible, of course, the sector classification, just to be sure we get the correct information at sector level, and perhaps also define the sectorial model that can be used at sector level, so that we can have a kind of standardized KPI, an additional KPI at sector level. But what is also important for us is to get the full description of the corporate business activities of the companies at product level and service level. Is also really important. If I may, related to topics and subtopics, we should stick to the ESG terminology, which is much more straightforward and commonly used in the sustainability field. For the multi-capital approach, in fact, the only advantage that we see using that and making reference to this would be to make the link with the country assessment and the potential aggregation we could make with the information we collect at company level with those collected at countryside, and put it together in a portfolio that is exposed to countries and to corporates. And the last element about the time lag, of course, for financial institution, it will be not possible to deliver information if we don't have 6 to 12 months lag between the moment we get the information from the corporate and the moment we have to aggregate all elements we receive at portfolio level, but also at financial institution level. And I come back to the previous comments. We already have big issues with the deadline we have to publish and disclose the information for SFDR at the end of the year for the portfolios, and also for the taxonomy starting from beginning of 2020. Thank you.
Thank you, Isabel. A quick reminder, have a look at the questions, for the polling questions, please, and do answer if you have not done so far. A quick reaction or clarification following what you said, Isabel. As regards sector classification, if you have a view about the sector classification that is to be adopted, we feel that it would be helpful. At the moment, in the task force, we are looking at the NACE classification because it is the one which is generally adopted in the EU. And I think that is the most commonly used. As regards the sector-specific disclosures, it's not decided by sectors per se. It is a standard setting exercise. So what we are saying, in fact, is that there is a sector agnostic level layer of disclosures as standardized by the standard setter, but there would also be a sector-specific layer of disclosures as established by the standard setter, which would be mandatory. And that's why the entity-specific is the third layer. It's a cascaded system whereby you start with sector agnostic, you complement with sector specific, and then you complement, if need be, by entity specific. Entity specific, of course, are very relevant normally, but they lack comparability. So it's a balancing act between what is introduced under the first two layers and the final one, which is a complement of complement, if I ever simplify. So that's the view in order to create a consistent and comparable landscape. Intersectorial comparison and intra-sectorial comparisons. I turn now to, we had Elena, so Jean-Philippe, for your 2-minute comment.
Yes, thank you again, Patrick. I would like to come back to the message of Marie-Pierre Payon in the introduction with a message of simplicity, and that's what I would like to advocate in 2 minutes when we discuss this slot ESG architecture. If I may use a comparison, when we think about architecture, I would recommend to think about Roman art instead of right now flamboyant Gothic art, if I may say. This message to be simple and robust, of course, it's for us European stakeholders, but also for non-European stakeholders. In the discussions, we know that in the future and even in the present date, we are thinking about expanding our job outside of Europe. And this message of simplicity is very important when we discuss with US, UK, or Swiss friends. And this message of simplicity and pragmatism doesn't mean lack of convictions. That's important to keep in mind. And this message because we have noticed the example of the EU taxonomy. Taxonomy is great in its principle to build a common language, to clarify what is green and what is not green. So great. But the result is complex. 440 pages just to deal with 2 out of 6 environmental objectives, the climate change. So if you do the multiplication with the other European objective, plus social, plus governance, does it mean that we will have thousands of pages, open questions? So my message, as you understand, is simple but very important, that because the risk of complexity and technostructure could be a real dilemma. The example is that today with the taxonomy, only corporates have the information. We, the user, we are just waiting for the results that we will have this year or next year and so on. So thank you for your attention with this message that we need simplicity to expand and not complexity. Thank you.
Thank you very much, Jean-Philippe. Please, now the floor is for Boek de Vries. You are chair of the EACB Sustainable Finance Working Group, and you are working for Rabobank.
Yes, thank you. So I'll focus in my 2-minute comment on SMEs. SMEs are clearly very important to the European economy, and also cooperative banks, they serve a lot of SME clients. And the economy is in transition, and I think it's really important that also SMEs are aware of the climate risk and the ESG risks, but they can also be part of the solution, help us transform towards a more sustainable economy. So this reporting topic that we discussed today should also have a clear chapter for SMEs. It should be a proportionate chapter, like Carsten Sielke also said. It should give them perspective on how to help the transitions. So I'll focus my comments on that. SMEs are not as well equipped as large companies, as listed companies, but still they can participate in this, and they have products and concepts that can help the transition. We think we should develop and have a conversation with EFRAG and the other stakeholders on how to simplify the concepts for SMEs and how also to start this work really focused on the taxonomy. And we could help the SMEs if we show them a materiality assessment, for example, the one by SESB, which is really nicely tuned to sectors, to different topics. It looks at the social capital, the environmental issues, the human capital, and at the sectoral level, an SME wants to start with something simple, the sector that they are active in. A second element I think we should consider is to start this framework voluntarily for SMEs and then try to move towards a mandatory system. But I'm saying start voluntarily because we should allow her for some time to experiment with this, simplify the concepts that are in the NFRD for larger companies, and clearly at the end of the day, everyone has to participate. One element I didn't mention, but which really should be included here, is the CO2 footprint. Every company, large or small, should be aware of its CO2 footprint. So to round off my 2-minute statement, I think if we do this properly and if we succeed to make this data-based, those assessments will not only be used for reporting, it can also be used for capital purposes. And this is clearly important to banks, that of course we make risk assessments on our portfolio. The better we can document and assess the risks and the opportunities also of the SMEs, the more targeted we can also implement this in the capital framework. So as a final remark, the EACB, the cooperative banks, they welcome the fact that EFRAG has also started to look at this in a separate project stream to look at the specific tailoring of those reporting requirements for SMEs. Thank you.
Thank you, Booker. So I turn to Osin, if he has now solved these connection problems. Do we have questions on the chat?
Yes, we have a number of questions. One is about the 3 layers proposals and how materiality would apply. Would this entail a specific materiality assessment for each layer that you are proposing? Another comment is the interaction between the capitals, and as the slide presentation seems to suggest that these topics are taken in different silos, and this participant asked whether an integrated reporting approach would not be preferable to identify the interactions between these different capitals. For instance, environment can have an impact on social. There's also a general comment, not specifically on this section, but also on the prior one, on the terminology, the new terms that are used. For instance, and different participants mentioned what is the definition of value chain, of impact, vertical alignment. So there is a question on whether these terms are used only in a specific context of this presentation, or if it is envisaged that they are defined in your proposals or in the future regulation.
Okay, thank you, Osin. Sorry.
No, this is it for the questions.
So quick reactions. The 3 layers and the materiality assessment. Yes, there is a need for, determining what is material under the double materiality approach for each layer. The ones that, the topics or subtopics that should be covered, or the KPIs that should be designed for sector agnostic, and then also at sector level. So it's a, it's a cascading, as I mentioned already, it's a cascading exercise. You start with the agnostic level because this is the one which offers the best level of comparability. And then you move to the sector specific, which is enabling to determine the best in class rather than the best in universe, under the traditional description. And finally, you have the entity specific, which we hope it's absolutely necessary as a process. But, it is good for relevance, as I mentioned, but not ideal for comparability. So the answer is yes, a materiality, designed to address priorities under each of the 3 layers. As regards the interaction with capitals, the task force felt that, the principle of integrated reporting and also interconnection is important. It's a good trend. At the moment, it's very much a very overarching principle of corporate reporting rather than a set of standards. It is inspirational rather than operational. And that's why we suggest compatibility. We feel that establishing, a clear link, a clear compatibility linkage between what would be done under sustainability reporting and under what would be done under the concept of integration is a good step forward. That doesn't mean that you have to be careful. Yes, integration implies interaction between the various capitals. No capital can be seen in a silo type approach. So sustainability reporting and management reporting as a whole should take care of information on each topic, but also interaction between topics. And so that's why it is important to mention the concept of integration somehow. As regards terminology, yes, it's true that we have developed, or we are developing, a terminology. Many people have highlighted the need for a glossary, which we'll try to establish before the end of this report. But as you know, the schedule is pretty tight, and we are working very hard. But I hope we'll be in a position to have a glossary. Polling questions, Saskia?
Yes, thank you, Patrick. We have a series of answers. There you see them as well on the screen. So on question 5, relating the topics and the subtopics to a multi-capital approach, about a bit less than half said yes, it's a good idea. Also quite a bit said I don't know, and some say no. So it's a bit a mixed response. Then on the question about the time lag of the use of data for the financial institution to produce their sustainability reports, there you see as well that the views are a bit split. A slight preference for 12 months, but you could almost say 1/3, 1/3, 1/3. Oh, back to you, Patrick, or perhaps if somebody wants to react.
Yeah, Marie-Pierre, maybe you want to react.
Yes, so I think we had this about intangible. Firstly, among the task force, we have the debate why do we need to introduce intangible? But I think it's much more a question of definition, and we have to explain what is important to make the link between ESG topics and a multi-capital approach. And no comment on the other point.
I was surprised because I thought you would like to comment on the other one.
I know about Patrick, but I prefer to comment about intangible because I don't have the time to look at the slide very well, Saskia. If you need
I think that what is interesting is to, at the moment there is, if I may say so, financial institutions are requested to produce information on the basis of data that is not yet available because not standardized. So we are the other way around. And should the landscape change, I think there is some sort of expectation that in fact you cannot, it would be difficult to work on the data prepared by preparers, let's say at the end of December 2022, and build your, at financial institutions level, and build the reports on this data for the same reporting date. So that's what it outlines, I believe. And that's Book, you wanted to react.
Yes, I would like to underline that point, that given the current frequency of reporting, financial institutions can only report 1 year later. If you would devise something different, we could speed up that process. But currently, we would be depending on information which is in reports. And that is not really a flexible situation. So either we should start with 12 months, or we should come to a situation where we get more frequent, reliable, consistent information of our clients.
Okay, that's interesting. That's interesting because at the moment you are requested to report 2 years before the data is being prepared, under an optimistic view. So thank you very much. We are moving to slot 4. Carsten, your introduction, please.
Yes, thank you, Patrick. Slide 19, please. Well, not only it's important to know what to report, but it's also where to find the information. As users, we currently analyze the CSR reports, and we have so much difficulties in finding them because everybody considers its own priorities where to put this sort of information. So it's important to have an interconnection also between sustainability reporting and financial reporting, and to know where to find this kind of data. So here it has already been discussed. We are on the way to an integrated reporting system, which could give you both sets of information, which would give especially users then the ability to make an overall assessment. So therefore, I also think that we will see, this is a prediction from my side, a sort of merger between the ESG analysts and the traditional users. There are also already some legislations where it's obligatory, such as South Africa. Going now to the more specific orientations versus for financial institutions, it's important to have the information, as I said, is at one common place. And here the idea was to have a dedicated section in the management report, where you would, on one hand, quantify and also give qualitative information about the sustainability engagement and implications, and on the other side, the interlink between financial performance and sustainability performance. it would be important to have a stable reporting structure, which is comprehensive, but also to permit to have that, to have a digital taxonomy on sustainability data, because otherwise you cannot report in a reasonable way, especially if you're a user of a lot, depending on the reporting of a lot of other entities. Therefore, it's very important to have a common database which is easy accessible to everybody and easily findable. Therefore, we also have the polling questions related to these topics, and we are eager to have your responses.
Thank you, Carsten. I'm giving the floor to Uwe Sigmund.
Yeah. Hello. First question again. Do you hear me?
Yes, we do.
Okay. I have three comments on this point. The first is I think the German insurance industry as a whole is in favor of the single access data point because this gives free access, gives us standardized data. They might be digital, comparable, neutral, you know this. It's gaining ground. It's not only the high-level expert group, but quite a lot of other people are also in favor of that. So I think this should be a public good. The second point is, and this is my personal view and not that of the German insurance industry, is I would like to see sustainability reports separated from financial reports. I think it's too early to integrate this. Sustainability reporting is quite new, say for 10 to 15 years. Financial reporting is more than 100-year-old. And I'm a little bit afraid that at this point of developing ESG and other issues, that there might be a too straight corset for all these issues that might develop in the future. Furthermore, there is already an internal drift towards financial reporting. Somebody mentioned it before, financial important data. So if there is a price, say to carbon or to plastics or to other things, and if this is material to the firm, then of course it will come up in either in the risk or in the financial statements of the firms. And then of course accountants can cope with that. Furthermore, there might be more issues outside a firm which are non-financial but are not sustainable. Just think of digitalization or data protection. There might be other issues coming up in the future, and I would not like to have a management report already full with sustainability things. Third or fourth is if it is so important to society to have reporting on at least the minimum set of ESG data, why not have the regulator more involved? You have seen in Germany, neither the regulator nor the accountants are a safeguard to have fraud, just to mention the Wirecard case. So we also need NGOs, competition, and other things to monitor the firms so that the data are reliable on. And at the end, I would say there are already sustainability standards out there with the Global Reporting Initiative or the TCFD task force and others, which can be used or can be developed toward separate sustainability reporting. And at the end, I would like the EFRAG to have a type of use test. A lot of people mentioned already today that there's a lot of regulation and disclosure already out there. Say a lot of people, a lot of firms and financial firms will report their impact on the social development goals. We will have to disclose our do not significant harm principles. There have been 15 parameters discussed in the first version of the RTS. There's the ORSA, the own risk and solvency assessment in Solvency II, and climate stress tests coming up also in the banking sector. And of course, we have EU taxonomy quota data, and these are more or less all quantitative data, and I'm not yet sure whether all of this fits in all of your guidelines and principles. So please try to use this already existing, how it fits within all the guidelines and things you are discussing. Thank you.
Thank you very much, Uwe. Jean-Philippe Desmartins, the floor is yours.
Yes, thank you. Thank you for the invitation to be part of this ESG reporting structure debate. As co-chair of the ESG Commission of EFFAS, which is the European Association of Financial Analysts, which represents 14,000 investment professionals all over Europe, I'm happy to promote the importance of integrated reporting, which means one report dealing with financial and non-financial items. This concept is quite old now. It has been formalized in as soon as in 2010, and today hundreds of European corporates have embarked it. With this concept of integrated reporting, one report, we have the assurance that sustainability is taken on board at the top level, I mean strategic level, impact, business model, risk and opportunities, etc., etc. With the different capitals, we have also a large approach of sustainability that a large majority of people want to have. Of course, it's a long-term view, and we have all the social and environmental items that we need. Thanks with the practice that we can now share more than 10 years, we can guarantee you that internally, I mean, at the level of the corporate, there is a strong coordination between CFOs, human resources executive, environmental executive, etc., etc. I mean, sustainability among corporates, that's this strong coordination. As I was saying also, we cover via integrated reporting a large spectrum of sustainability. And last but not least, it's a do more with less approach, efficiency. We optimize the resources. That's also very important. So with this global remark, I remind you that human beings still at this age only have one brain today, and I think for a couple of next generation. And human beings working in corporates or as investors also have one brain. And personally, I'm an analyst, an ESG analyst, and at the same time a portfolio manager. And as you can see, I only have one brain. So thank you with this opportunity to emphasize the importance of integrated reporting. Thank you for your attention.
Thank you very much, Jean-Philippe. You know, the interest of collective work is that we are putting brains together to to increase the scope of what we are trying to achieve. Sometimes it's a bit difficult, but let's move forward. So now I have 2-minute reactions from Massimo to start with.
Yes, thank you. I wanna echo Jean-Philippe's points, and my contribution will be based on two topics: integrated report and core and more. Well, in my professional experience, with my team, I implemented integrated report to be compliant with the non-financial directive, and I fully support Jean-Philippe's points, because this is a tremendous catalyst for integration within the company. So CFO is working hand on hand and by hand with sustainability, risk, compliance, HR, I mean, all the stakeholders inside the company. So integrated report is the solution, in my opinion. And core and more, it's another very valid element, because in the core report, which is the integrated management report, in our case, you will find all the relevant information, whereas in the more reports, you will find all the detailed information for specific stakeholders. So I'm fully supporting an integrated view. I think that the separate disclosure will create a silos mentality in the corporation. So I know it's hard to implement at the beginning, but this is the only way to integrate effectively the financial and the sustainability decision-making process within the corporation. Thank you.
Thank you very much. Richard?
Great, thank you. Yeah, I mean, I see that you highlight two types of reports, sustainability and financial reporting. I mean, I would echo the points about integrated reporting. I think that that's important. I would also say that there are other forms of reporting that are required at different moments in time. So, you know, if you're issuing a bond, for example, you have issuance documentation that's linked with the bond. So as I said earlier, I do actually think that, you know, this should encompass various different types of reporting, including financings. The interconnection between different types of reports. So I do think that where there is a material set of information referenced in one report, then it should be explicitly cross-referenced to the next report. So it's easy to switch between different reports if that is the approach. I agree with the concept of a digital taxonomy. It should actually be readable by all according to a standard type of classification system. So KPIs and additional commentary should be, I think, readable by all. This actually will help speed up reporting cycles and help with the issue of between financial institutions and maybe the companies that are reporting, because you know, all types of different institutions could easily read the information if it's easily tagged. I do actually think a digital taxonomy of sustainability indicators should be required at the very least for a minimum core set of sustainability key performance indicators. And that will be especially important when you're looking at reporting, not just for large entities, but SMEs as well. It needs to be easy for everybody to be able to take information from the marketplace in a machine readable format, not just a single point of access, but also for any entity to be able to do this, because there are multiple different use cases for this type of information. I think it's going to be important to have transparency around a digital taxonomy that can be easily read by everybody. And my final point is that I do also think there should be a clear communication mechanism identified by the reporting entity so that if further information is required, there is a kind of streamlined process to get that information. So companies may wish to report certain information in order to be concise, but organizations, for example, like ourselves, when we come to analyze things like credit ratings, may wish to you know, have a conduit, if you like, to an organization that is easily identified. So some tagging of kind of a process, if you like, to gather more information beyond that which is published would be also useful. Thank you.
Thank you very much, Richard. Before turning to Elena for her comment, I would like to remind the polling question. So the polling questions. So Elena, please, your reaction.
Well, about the reporting structure, I share the view that yes, it is, especially as a user, it is important to have all the information in one document, especially if the information is focusing on a list of KPIs, a set of KPIs that is clearly indicated. I agree on the digital taxonomy as well. Let me also tell you that as a preparer, and I represent here a group where we have a banking division, an asset management division, and an insurance division as well. So a fully integrated financial institutions. When we are talking about preparing sustainability reporting, we have to face a couple of challenges that I would like to highlight. Just to let you know. The first one is the length of the documents, especially in Italy. Italy banking financial reports have hundreds of pages. Our last one was 877 pages. The consolidated one, 600 pages, excluding the parent bank records. So Of course, this is an issue if you have to produce such big documents, if the national legislation is asking you to produce such large documents. Of course, it is an issue to be considered and a challenge for us as well. So either to include some sustainability information, but maybe leave the rest in a separate report. That could be an option, and this is the option that we are being following. Second one is on timing. With the fast closing, we see that financial reports tend to be closed rather early in the year, generally in February, while non-financial KPIs, sustainability KPIs might require some more time to be collected, also considering especially for big companies that have to span within the different departments and within the different group subsidiaries. So this is another issue to be considered, I think, when talking about the positioning of the sustainability statement within the financial reports. And those were just my comments, quick reaction on that.
Thank you, Elena. For clarification purposes, the current trend in the EU is to make sure that sustainability information be available at the same time as the management report. Therefore, the idea of the primary idea is to have the information included in the management report. The task force considers that it might be a good idea to distinguish within the management report the sustainability statements, what has been called sustainability statements, and leave the overarching element of the management report, to address the integration, the more judgmental approach, the visionary dimension that governance and the management has to give. And making a distinction between standardized information in one place and if I may say so, using a ice skating comparison, freestyle in the rest of the management report in order to avoid confusion. Now, I would like to express a view on the length of reports. I realize that it's a constant battle to try to streamline, and every day it's a lost battle. I have seen it in my career and in my position today as a member of the boards overseeing capital markets and also banking and insurance in France. It's a lost battle. It's increasing every time. And quite frankly, in a digital world, I would be prone to advise to have, in fact, several levels of reading. The executive summary type, the even press release level, and then you drill down through a number of layers of reporting depth, because you cannot avoid, to a certain extent, the volume of information. And because if it's too summarized, it becomes irrelevant. And if it's too detailed, you lost track. But if you have a number of, layers of reading, then maybe you can position yourself at the level you want and drill down on certain topics through, the links that are established. So sorry to put that into perspective, but I think it's important. Oisin, the questions?
Yes, first there are a number of expressions of support for integrated reporting in line with what some of the speakers have said. There is a recurring question about what we mean by related taxonomy, and there seems to be some confusion with the EU taxonomy for sustainable activities.
No. Yes,
and the European
taxonomy.
The single reporting format, the European single report, which is also referred to as taxonomy. So if you can clarify what you mean by reporting taxonomy. And then we have a comment from a preparer about the length, and in line with what you just said, Patrick, the length of the financial report, if all this information is captured, and the need to drop, and this is the term they use, over information, if this additional information is to be provided.
Okay.
And I think this is...
Sorry. Okay, thank you, Oisin. As regards taxonomy, no confusion here. Taxonomy is a generic word that in fact means classification. It was invented sometime in the 18th century when you had to classify beings, animals, plants, and things like that. So yes, we are not talking here about the EU taxonomy of activities, the green ones, the less green ones, etc. We are talking about the classification of data. And we are talking about an architecture of reporting that allows for, as it was mentioned by Richard, that allows for tagging, i.e., you would have the human readable information under a coherent format, maybe the sustainability statements, and you would have also the machine readable version of that, where you can choose and pick the information you want. You can reconstruct the book, but you can read each and every page. But in order to do that, you have to divide into granular tags that are the reflection of the overall reporting content. So, that's what is called tagging. So we are talking about this classification under slot 4. Saskia, the polling questions.
Yes, Gloria, can you show them? So first one was about the location of sustainability reporting. There about, I would not say the majority, but 40%. So the highest score was for in an integrated report where relevant. And then the second highest was the dedicated section of the management report. So you see the scores on the screen. And then as a third one, it's in a separate report. So a big mixed views, but a preference for the integrated report. Then we had a question about the how important it is for financial institutions that the EU would have a public database to ensure data quality and accessibility. So there you can see that many of you, and we have seen in the audience background that many of you are from financial institutions, think that it's very important, because if you combine both scores, then you come to, for the yes, to about 90%. So that's, I think, a clear message to the project task force. Thank you, Patrick.
Thank you, Saskia. So we're moving to our last slot. As I mentioned, is more open because we're still discussing this as task force level, the ESS priorities. By the way, I didn't say it, but ESS stands for European Standard Setting or European Standard Setter. So, Carsten, your introduction, please.
Thank you, Patrick. Yes, now we really need your advice on setting your preferences for the priorities the European standard setter would envisage. On slide 22, you see again the concept here, which basically reflects an integrated reporting system. And now it would be interesting to know from you where the priorities should be in the different layers in order to become operational. You got a small description on page 23 that what can be done in order to use the sustainability momentum in order to come to these objectives. But specifically, we would like to get inputs also what's the interconnectivity with other principles. On page 24, we see for financial institutions, it's very important that the European standard setter should provide the framework for proper interconnection concerning methodologies, processes, and anchor points. But also, this is reflected in the polling questions to other standards such as local GAPs and international accounting standard. So we are happy to get your input on these two questions. Thank you.
Thank you, Carsten. We have to be careful about the term interconnection. Interconnection in the context of the report is meant to specifically address the relationship between sustainability reporting or sustainability statements and financial reporting in order to create a coherent and consistent continuity between financial information and sustainability information. Now, the idea of onboarding via proper input international initiatives when they are relevant for the EU goals, to meet the EU goals, is also a key element which needs to be discussed under this slot. I turn to Elena for her 5-minute intervention.
Okay, thank you again. Talking about priorities, I agree that sector agnostic general layer should come first and then go to be completed by sector-specific layers, starting with the sectors with higher risk profile, ESG risk profile, and the bigger ESG impact. Second point, I would envisage a set of mandatory KPIs for all companies, also in order to foster comparability, also across sectors. The third point is on SMEs. The approach to SMEs is particularly important, otherwise sustainability reporting remains a field only for big and listed companies. In Italy, some 200 companies are subject to the NFRD, so this leaves a lot of companies outside it. And it is also important for financial companies because if we are to include ESG information on customers in our systems, in order to reorient our financial flows, be they investments or financing in particular, we must overcome the issue of data availability. We need reliable and comparable data, not only for our biggest customers, but overall on the system. And this is particularly true for systems where the share of SMEs is important. I'm talking as a financial institution, but I would expect very same need also for companies when they are analyzing their supply chain. Of course, talking about SMEs, should be taken into account the size of the SMEs, whether they belong to high-risk sectors, the efficiency of the process also, accessibility of the indicators. So again, here a set of mandatory KPIs would be useful to have in order also to know as financial institution what to include in our systems. About streamlining and simplification, I think the presence of an EU standard could be in itself a simplification, provided that the standard is compatible with, first, the incoming EU regulation. So I'm thinking about the taxonomy, thinking about, for example, the non-binding guidelines on climate-related reporting. So a standard that is comprehensive what is coming in terms of EU regulation. Second, that takes into account the standards that are already used by financial institutions. This is because, for example, we use the GRI Others have been talked about earlier. A lot of us as work also within our systems on implementing these standards. So a lot of work has been done, and of course we want to capitalize on that work. Third point, a standard that allows companies to cover the needs and the requests that are coming from the different stakeholders. So of course we have different stakeholders, we have investors, some of them are European, others are not, and so forth. And in the end, a standard that is compatible with the international standards, and a comprehensive one, so that we end up having one document rather than a sustainability statement, a TCFD statement, an SDG statement, and a PRB, and so forth. So I think these 4 points are important, and therefore we are encouraging EFRAG and European Commission at large, and Europe as well, to take the lead on these issues, as it is the case for sustainability teams as well.
Thank you, Elena. Anna Irska.
Thank you very much. In the interest of time, I try to be very, very brief with my comments here. But
don't worry, we started a bit late. So
fair enough.
Don't feel restricted.
Good, thank you. I think one of the priorities is, I agree with what Elena said earlier. It's to do with global benchmarks and standards. And I think so, like, understanding and the developments within the international sphere will help on all of the aspects, on all of the levels when forming the reporting standards. And when I do talk about global benchmarks and standards, I talk about entities such as TCFD, SASB, GRI, CDP, IFRS, but then also PRI, for example. PRI has just renewed its own reporting framework, and there are over 3,000 financial institutions already reporting according to the PRI. So I think that's one entity that should not be forgotten in this exercise when looking at what is happening on the international forum. I do think that another priority is to think about these KPIs, and my suggestion would be quite similar to what Elena said, but instead of talking about mandatory KPIs, I would talk about core KPIs. Has got a bit more positive vibe to it than mandatory, and the core KPIs could be something that is asked from all companies. Obviously then deciding where the threshold is, that maybe the tiniest mom and pop shops do not need to do that, but it doesn't have to be the 500 so like level of workforce, but much smaller. But these would be for the sector agnostic and sector specific, that we would have core KPIs on both sector agnostic and sector specific level. And then on top of the core KPIs, we would have additional KPIs. And these additional KPIs would actually or could be mandatory for larger companies, larger corporations to report on. So that would be kind of like a stepwise approach and easy access to smaller companies to start reporting that there is a very sort of like a set of core KPIs that they should report on. Larger entities would do the core and the additional ones. The entity-specific one, I think it's really important as well, and that's where especially the materiality assessment comes to play. And there should be some guidelines on how so like reporting entities do talk about the materiality assessment. And because that's one way for us, the investors or the users of the data, to also get a feel and understanding on how well materiality is looked at on the company level, and how they have assessed their risks and opportunities, how they have looked at their sustainability work. And I do think that the core and the additional KPIs should be based on existing frameworks and models, because there are already quite a lot of these out there. And when there is a limited set of KPIs, a limited set of what needs to be report, they should be then easily incorporated into financial statements. That would be my 5 minutes. Thank you.
Thank you, Anna. Incorporating in financial statements, I am careful about that. At the moment, it's...
I'm talking from, I should have said, I'm talking from a Finnish perspective, where the management report is part of financial statements already. So let's say broader financial reporting, not the narrow definition of financial statements as such.
Okay. Thank you very much for the clarification. I turn to the shorter comments. Ulrich?
Yes, thank you, Patrick. I have only one short message. It's around timing. Elena mentioned this also in the third section. Timing is key around sustainability reporting, and I see a lot of confusion regarding the timeline. If we are not talking only about non-financial reporting directive or non-financial reporting, you all are aware about disclosure regulation that is starting in 10th of March this year. We have taxonomy, and I see there's a lot of confusion around the timeline. The first question from the participants was something like, at what time non-financial reporting starts in Europe, and there was mentioned January 21. I guess that makes clear that there's a lot of confusion and less clearness around the timeline. So maybe the task force and even EFRAG is not the right answer of this question, but because I think that it's mainly on European Commission side to make clear at what timetable, timeline we should start with this reporting. But I would ask all participants to focus a little bit on what is the timeline for all these new regulations. That's from my side.
Thank you. One clarification which might be needed is that, of course, the task force is, has two challenges. The first one is that it was decided by the Commission to operate in parallel the thought process on revising the directive, which is fine, and also conducting preparatory work for a possible EU standard setting. That creates a challenge because, of course, we know that some decisions will be taken at political level by the EU institutions, defining what is legislative when we are working on the regulatory aspect. So that creates a bit of a challenge, but that's one of the, it is also the interest to be interacting and working in parallel. The other difficulty is that we do not want to preempt. We have been told very clearly at the beginning, and it's very clear in the mandate received from Executive Vice President Dombrovskis. It is very clear that we shouldn't end up with standards. You know, it is for the next step, not for the end of January. So we have to be careful. We establish the principles, but we give orientations, or we propose orientations, but we are not saying this should be reported under that number of KPIs, and we favor this or that yet, because this is standard setting work. Okay, so. That being said, Book, you had a reaction on this?
Yes, thank you. So I would like to highlight 2 points. One is on the EU data register, and the other one is on the KPI discussion. So the cooperative banks and also the other banking associations, they've asked for one central data point on ESG data. And also we are very positive that the European Commission has announced that they will create such a single access point. And this access point will unify and combine financial and non-financial information which is publicly disclosed. And it can be very important for our own disclosures to have speedy and easy access to that data point. So we would like to stress that this is a very positive development. And if I'm correct, we can expect legislative proposals in the second half of this year. And I think also EFRAG and our future discussions on this can play a positive role in this respect. So then, what should be the critical information that should be collected in such a database, and how do we think as a bank we can use that data? The first I would like to mention here is that a lot of the focus of banks is now on the taxonomy, on how to transition our portfolios and how to help our clients to do that. So any information which is collected should clearly have a link to the green taxonomy that the European Commission is working on. I'm quite aware that in this discussion today on reporting, we mean something else with taxonomy. But here I highlight the importance of a congruent approach to the European green taxonomy. The second element, I think, which would be important for us is to get access to government data and to central bank information, which is being collected from companies already. And I give one example to illustrate this, this is for our own Dutch market. Emission data has been collected for a long time already, emissions of companies. These data have been reported at aggregate level to get a sense of what are emissions of sectors. The financial sector has asked in the Netherlands, in an initiative of PCAF, Platform for Carbon Accounting, to this governmental organization to make this data more granular, to allow us to combine that emission data of companies with our own portfolios. And this is crucial for us, that we can see performance differences, and we will challenge the ones that do best, and we will challenge the ones that stay behind. And in the end of the day, the biggest impact we have is in the middle category. But if you don't see difference, you can't challenge your clients. So we ask for this access to publicly available data at the most granular level. And when necessary, to make sure that, of course, confidentiality of information of individual clients will be respected by anonymizing such data. To round off, this data should be available at a low cost or perhaps at cost price. And I think it should be accessible not only for companies themselves, for banks, but also for researchers, for rating agencies, a wide range of users. So I think that is the most important to us right now. Collect granular data, make sure that data are connected, and use the momentum of the green taxonomy and greening the financial sector. Thank you.
Thank you. Thank you very much. Massimo?
Yes, thank you. First of all, I would underline that this is a journey, a mid-long-term journey, and so we need to prioritize. I would like to echo Elena in relation to the priority, and in particular in the financial sector. We have right now some regulatory priority, which is the taxonomy, for instance, or the FDR. So I think that in your roadmap, very advisable to connect these already in place regulatory drivers. Then I do like Anna point on the core KPIs, which is very connected with the core and more approach. And in the short term, I think that the main focus should be put on the core, both agnostic and sector specific. And finally, on the global connections, yes, it's very, very, very relevant that Europe will look at the global initiative already in place in order not to reinvent the wheel. Notwithstanding that, I think that we as a Europe, we have a tremendous opportunity here because all over the globe, our continent is a first mover in this space. I think we have a great opportunity to lead the globe in this right direction. So look at the global initiative, but continue leveraging our first move approach in this strategic topic. Thank you.
Thank you very, very much, Massimo. If I may turn to Asin for questions.
Yes, there are actually a few questions on this topic, more agreement with what is said on slide 23 on the need for cooperations. There is one very general questions about priorities and whether the moving towards global standards should be included in the priorities as well.
Okay. Polling questions, Saskia?
Okay. We had two here as well. So what should be the highest priorities? Gloria, can you put them on the screen? There they are coming. So as you can see, the first one is a coherent first set of requirements. That has slightly over 50%. And then as second best, we have the simplifying and streamlining, or the second step probably. What is perhaps good to remark here that defining an approach for financial institutions is only giving the fourth place, and so it's seen as less urgent than doing the other first steps. Then the last question that we asked, and I think that was very much discussed and also in the what Hossein just said in the audience questions and also underlined by various of the speakers, the importance of compatibility with international frameworks. And probably after everything we heard, not as a surprise, if you count both yeses together, you come nearly to 100%. Thank you, Patrick.
If I may, Saskia, I make a difference between compatibility with and compatibility between. I will say that in the takeaways. So thank you very much. I think that we have kept the time, which is in spite of the little incident to start with, connection incident, but so that's real nice. I don't know if you wanted to say something, Marie-Pierre, as your own takeaways, or should I do it, or we do it? The two of us do it.
Well, no, I would like to thank you, all the participants, to give us their opinions. I think we are very in the same way. So I have no more comments, and I think Christina and you are going to finish the presentation, the session. Thank you very much for your participation. It was very interesting.
Okay, Christina.
So hello, also from Finland. My name is Christina Vares-Vartiovaara. I'm part of the project task force, and today I will be drawing together the final conclusions of this webinar. So first of all, I would like to say thank you to all the participants, both here in our panel as well as the public. We have had very active public and a lot of questions which we have not all been able to address, and I would like to say that all of the comments will be fed into our working groups, which will continue working for a few weeks still. So this webinar is very timely, and it's not yet when we have finalized the recommendation, so everything will be considered, and we still will work on all the suggestions before we issue the final report. So thank you for all the comments. Concerning the content of today's discussion, first, in the opening remarks, the priorities of our work were outlined. The priorities were to develop a set of standards to also simplify and compile all the existing regulations and best practices. The new reporting standards will have to ensure that all data is available for all stakeholders, so we need to cater all of the various stakeholders. So also we need to cater for the momentum of ESG reporting within Europe and internationally, and to support the public policies, to help the entities also to benefit from the data, and also to help financial sector to make transparent and trustworthy financial decisions, and to help transition to more green and socially responsible economy. In the first theme, the foundations of reporting, there was a discussion about the correct allocation of the financial resources, the role of financial institutions as allocators of these resources, and of course need to also to assure and to have very high quality data to be able to assure the decisions which are being made. Also, there were comments about the purpose of reporting, why to do this, and to combine various purposes of various users, and financial institutions again stand out as one of the main users of the data. Also, there was discussion about how we should name this reporting. Is it pre-financial? Is it sustainability, or something else? And we were more in favor of using the word sustainability reporting, and to also integrate it to a reasonable extent with the financial statements, and quite overwhelming support there was for integrated reporting, even though we understand that some integrated reports can be very, very long. So to a reasonable extent possible to integrate the reporting. Intangibles were also one of the big topics of debate. And it's fair to say, I think here we all agree, that intangibles represent the economy of a century, as mentioned by Jean-Philippe, and that we need to start understanding how these questions of, for example, patents, of client satisfaction, of climate urgency solutions, how they all integrate with non-financial or sustainability reporting. Also putting sustainability at the heart of strategy and having sustainability statements within management report, again to a reasonable practical extent, was seen as very clearly important, and where we agreed in opinions. In the operational guidelines, there was discussion of how to set a minimum set of KPIs, which would be broadly applicable, and how to make sure that for financial institutions which have very broad range of financial instruments, very broad range of asset classes, we need to report on how to consider all of these different levels of assets and liabilities, so that we have catered for various types of our business segments. Also, the externalities cost accounting was mentioned. The importance of impact assessment, And then here we come more and more into the quantification of the impacts and of quantitative KPIs. Of course, we also need the qualitative KPIs, but the importance of those which can be measured in monetary terms as well as other quantitative is very important for risk assessment and for integration with our financial statements. And of course, not forgetting the human rights issues and then do no harm topics which are related to climate and all other sustainability issues. Importance of global benchmarks was mentioned throughout the discussion, and also very nicely in the conclusions. It was said that even though we need to consider the global benchmarks, it is very good for the EU now to leverage on the first mover advantage and to create a benchmark as well by combining all the best practices that we know of. There is potential for a global first mover best practice setter at the moment. Also, discussion was around the wider scope of different standards for various types of sizes of companies, SMEs especially. Also how to make sure that foreign entities report or are somehow within the EU area supportive or in line with the EU regulation. And of course, pragmatism in everything we do, and to have a minimum practical set of KPIs. In the architecture part, the discussion between whether there should be a separation of the social capital or the relationships part into a separate reporting area. I think it received a fair amount of support. There were some people who thought that maybe this traditional ESG, where social combines the human capital or the own personnel of a company as well as the outside relationships, that it doesn't need to be separated. But there were a lot of good arguments also in favor of having the social dimension or the external relationships separately. I already mentioned the quantification. So also the capitals, different types of capitals approach was discussed, whether it should be included or not included into the architecture of sustainability reporting. So different types of capitals approach comes from the integrated reporting and tradition, and here in the EU there is clear need for moving towards integrated reporting, and thus this capitals approach is one area where we would like to have it as an inspiration to not something prescriptive, but where we would like to experience or experiment where the connection could be done also with sustainability accounts. Discussions about sector classification also was very interesting. Of course, EU uses the NACE classification, but we would need to, and perhaps this could be done on the entity level reporting, to also define how companies define the various sectors in which they operate, because traditional sector classification only defines the main sector of a company, but we would need to know also the second and the third, if there are any material sectors of operation. So segmentation of companies' operations to be better disclosed is very important, and this needs to be taken care of. So what else? Then in the reporting structure, we addressed questions of interconnection with the financial statements, and overwhelming support we received for the single access point of creation of ESG database and doing it as a public good or at a very reasonable user price and for all stakeholders, open for all stakeholders. And also we discussed the reporting taxonomy just as a question of terminology. So EU green taxonomy not to be mixed up with the standardization classification of data and the data KPIs taxonomy. So it means just classification in this context. And then on the priorities, just to sum up, the importance for financial institutions of measuring ESG risks and impacts was seen as a priority. Of course, inclusion of SMEs, so that we as financial institutions need to report on all our clients, not selected clients. So to some degree, ESG reporting needs to cover all companies. And to start as a voluntary and move towards mandatory, so that we get this learning time and curve. And integration of global benchmarks and standards, and Anna introduced the concept of core KPIs. Sorry, my light is going out here. And the core KPIs to be seen as the both sector agnostic and sector specific KPIs to be selected where everybody would report on, and then additional KPIs which could be mandatory for larger companies. And perhaps the final comment there was still on this cost and data accessibility and inclusion of all other data which is already reported by the central banks and governments in the EU, to also include all of this additional data into the data bank, so it would be more complete on what we collect already. So this is in short a wrap up. If somebody would like to still make an additional final remark, please raise your hand, or then we will thank you for participation and continue to work to create European standard as one of the leading best practices in the world at the moment.
Thank you very much, Christina. I do not see any hand raised, so I will. You have done a great job, summarizing the takeaways from this very interesting session, very interesting outreach event. I would only say one thing at the end of the day, which is, some would consider financial institutions as a sector or three sectors as the other ones. And I think that today it was demonstrated that the fact that the task force has focused on financial institutions per se, due to the particular role in the financing and investment for transitions, is justified. So that's my takeaway. I also take on board personally the need for coherence in the EU, because it's maybe we have inverted factors, where the users are not the preparers are missing the data that is needed to prepare. Also, the importance of having an approach to the economy as a whole, including SMEs. The timing issue, maybe if there was one addition, I would do that, because it's a serious point, and the need for a comprehensive approach, but proportionate. And finally, I made this remark to you, Saskia, on compatibility with and compatibility between. I see very much the relationship with international initiatives as a two-way traffic, quite frankly, under the circumstances, which I think is extremely profitable for everybody. So I'm sorry, my battery. Do you hear me? Yes. Okay, my battery was on the AirPods was finished. So with all this, with maybe a little delay as compared to the timing, I would like to thank all the participants of the inner circle, and also all the participants of in the outer circle for their patience and also huge contributions. Thank you very much for having made this outreach event, I think, a success. Thank you very much, and have a great day. Have a great lunch, maybe. No, well, depending on who's cooking, and if it was me, it would be excellent. So have a great day. Bye-bye.
Bye-bye. Thank you.
Bye-bye.
Thank you.
Thank you.
Bye-bye.